Hey everyone, hopefully you're having a good day. My name's Andy. The channel's Finding Value. Today, we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it, generally related to 3 different topics: wealth building, commodities, and/or financial topics. So we're going to dive right in and take a look, see what's going on. If you want to follow me at @Finance, and if you want to join our community, finding-value.com, where I dive deeper into all of these subjects, looking for potential investment opportunities, sharing them with everyone. And we are running a special discount today. Special is that discount coupon code, 50% off the first month only on a monthly membership, and a larger discount on the yearly membership. And monthlies can always switch to a yearly if you like. So going into David Lee, says Trump finally realized reshoring is just a dream without electricity. As I have been saying for years, doubling, tripling electricity capacity takes decades, not any 4-year term. And it says Trump says we have to double, triple our electric capacity. So I think this is coming no matter what. And you know what uses uses electricity? I should say this differently. You know what generates electricity? Natural gas. That's been a huge driver of new generation of capacity. It's the largest generation of electricity is natural gas. And what we've been doing over the years is we've been replacing coal power plants with natural gas power plants. They run a whole bunch of renewables to the hub of the natural gas power plant. Then they convert it to the AC wavelength. So that's what's going on. We need to get way more electricity capacity. I think we've got transmission needs to go way up in terms of electricity transmission lines. So that's where we're at. Thesis Capital says, where will the heavy oil to the U.S. come from? Crude oil exports by Mexico's Pemex plummet 44% in January. And just to read a snippet here, it says crude oil exports by Mexican state energy company Pemex plunged 44% year on year in January to 532,404 barrels per day, its lowest in decades. Official numbers show, as the company has admitted, it is struggling with crude quality. The monthly level is the lowest since records in their current form beginning in January of 1990. Last year, exports averaged just over 811,000 barrels per day, and the year before that, just over 1 million barrels per day. So we're seeing a pretty strong decline in heavy oil from Mexico. And you can tell that they're obviously declining in supply. This is going to occur everywhere in the world at some point. And there isn't many places in the world that can grow heavy oil production. We on the channel are taking advantage of heavy oil investments that I think will do incredibly well over the long term. Heavy oil is required by a lot of the refiners. We built heavy oil around Saudi Arabia shipping us oil. As we became more independent, we've been importing oil from other areas. And right now, our oil in America is very light. We can't refine that oil. It's not heavy enough. So what we're doing is we are importing heavy oil and exporting light oil because of refining capacity and what they can refine. So it's important to understand that there's different weights. I can't remember. I'll just say different grades of oil, different weights of oil. There's heavy, and then there's lighter ones. We produce the lighter stuff in America. It's almost like natural gas liquids now. Garrett says, gold miners have been experiencing a stealth valuation crash. Rising gold prices has been driving value into the miners, but valuations failed to keep up. The gap between free cash flow per share and the market value of the free cash flow enterprise value is the largest discrepancy between those since crashes of 2015 and 2020. So there's 2020, 2015, and then you can see how low we are today. What this is telling us is that we have a great opportunity to buy gold and silver mining companies because of the discrepancy here. Now, some people will say, it'll always stay bad. I don't believe so, guys. What this is describing is the fundamental value of the companies. Now, there are good technical setups and good fundamental value in the companies. That's your confluence of information, the confluence of the data and the confluence of technicals and fundamentals aligning to have a good investment. And if gold and silver continue to go higher like they have been, I would expect the miners to follow suit here and probably vastly outperform at some point. I think what we need is a continued pressure and maybe even a decline in the S&P 500 and NASDAQ and crypto. And I think money will forcefully be rotated out of those areas and look for better investment opportunities that provide greater returns. This is one spot that would provide greater returns because of the valuation gap that we are seeing and looking at here. Ross J. Brown, so the Hang Seng Index is breaking out of a bearish to bullish trend reversal pattern. Highest level since early 2022. That's your weaker dollar. Currency exchange rates here. And we're seeing further breakouts in a lot of these foreign markets. The foreign markets look really good. And unfortunately, I can't say that about the American markets because of the overvaluation. And your margin of safety comes from the valuations. I know a lot of people, they want to just do technical analysis. I do both. I want everything that I can have in my corner. I want an early entry point with the value off the chart, off the page cheap with a decent bottoming pattern. So that's what I look for, are these ones that are breaking out of these bottoms, starting to head higher, that have ridiculously low valuations. That's the confluence that I look for. Middleman says uranium seems to have already run this bull cycle chart, but without going to the extreme highs. I'm not sure I would consider this the bear trap. It seems more like the latter end of the chart. Will this bull have many cycles repeated? Well, yeah, it is, but we're over here, guys. We're like in the shakeout trend emergence. Like the first portion is despair and accumulation. We've already gone through that. So I've got COPX here. This is your basing area, and then you get the breakout, you get a consolidation above the breakout, and then the move higher. URA is the same thing. It's a double bottom, a breakout, you get a consolidation, and now we are starting to move higher. But their time frames are too short. They're looking at the moves here and saying that we are not in a bull market. But we are. We're in a super cycle. And the reason I say we're in a super cycle is because every commodity super cycle that we've had before this have all the same traits. We've got gold outperforming stocks, stocks being the Dow Jones, S&P 500, the NASDAQ. Those are all starting to turn, which puts us at the beginning of the move, which is at the beginning of stage 2. So, guys, this is like, you need to understand this if you're going to be a long-term investor. If you're just a short-term investor, I mean, you'd be better off just going and gambling somewhere. And even with like trying to trade short-term chart patterns, you're not trading the fundamentals. You're just trading basically sentiment. So if you're zoomed in and you're trying to trade like these little moves here, those are all based off of, it has nothing to do with the fundamentals. The fundamentals are driving the big long-term picture view. So the fundamentals are driving the bottom here and then the break out of the bottom. They're not driving the day-to-day movements or the month-to-month movements like the squeeze here. This is sentiment, sentiment, sentiment pulling back. And what you want to do is you want to, if you're a long-term investor, you focus on the long-term fundamentals of this move, and then you buy the pullbacks in this. So that's called buying the dips in a bull market. So this is the exact thing that I see all over the place. What he said here is, will this bull have many cycles? Well, in Elliott wave, your cycles repeat over and over and over. So you get like basically you get a 3-wave up move, you get a down move after that, and then you'll get, again, this could still be one big consolidation here before moving higher. So that's what is going on. And the conditions, inflationary conditions, and then the inflation was coming slower, 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 and we'll see if it kicks back up. That's what's going to be a driver of this, because inflation generally drives higher interest rates, and higher interest rates causes a rotation of money out of some assets into these assets. Naval says, much of investing is avoiding FOMO buying and panic selling. Completely agree. If you're going to be an investor, you're going to fight with your emotions. And the majority of the stuff that you're fighting is yourself in FOMO, fear of missing out. So what that feels like is you're looking at a chart or you're looking at a stock, and you see the stock starting to advance like this. So rather than buying it on a pattern, a chart pattern like in this corner here or off support, that's generally what I would do. You buy it when things are up here. So when you look and you get a pullback, you're like, oh crap, I'm losing money on this pullback. But if you bought it back down here, then you got a better entry point with a little bit more cushion if we get more volatility out in the future. You also have a much cheaper entry price. Your entry down here is at 19 versus up here at like 25 or 26. Even worse, people buy it like up at the tip, where a lot of people probably purchased was up in here, and then you get dragged sideways for a little while. But these consolidations, they're going to happen no matter what. You're going to get 50% pullbacks if you're going to hold this in the long term. That is guaranteed. So you have to figure out what kind of investor you really are and what type of volatility you can handle. Because I've been in this trade for a while, and I've accumulated along the way, and the volatility does suck. It's bad. But if you want to make a whole bunch of money, you got to put up with a lot of volatility, unfortunately. Money Wisdom says, we waste our time with short-term thinking and busy work. Warren Buffett spends a year deciding and a day acting. That act lasts decades. So what does that mean? All that means is that stop wasting on the short-term crap. Most of it is political driven. A lot of people waste a lot of time on politics. Like, I don't think tariffs are going to do anything. That's my opinion. It causes short-term volatility, yes. In the long term, do we need oil? Yes. Do we need silver? Yes. Do we need copper? Yes. Do we need all of those things irrespective of tariffs? Yes. Then why are you worrying about tariffs? And then what he does is he focuses on, well, what is the best way to play XYZ? And then when something does occur and he finds it at a really good price, he acts on it, and that act lasts decades. He holds it for decades. The patience to hold. So he thinks really hard about his entry points of what company he should go into. He tries to buy it when it's undervalued or the best value possible, and then he just sits in it and does nothing. That is how he invests. I am trying to replicate something close to that. Now, the companies that we are in, they're going to go through cycles. So I want to try to hold it through the entire cycle. That's my goal. And I want to buy it as cheap as I can. And if I have money coming in, I'm going to continue to buy stuff and find things that are cheap, that are low and undervalued. And then I'm going to ride through it through the decade. Shell LNG outlooks from 2018 to 2025. It says expect emerging LNG supply demand gap in 2035 has almost been closed. And there's a lot of future projects coming online, a lot of LNG projects coming from America. My question is, can we supply that amount of LNG out of shale? I don't know. I mean, I think we can go higher. I don't know how much higher. So I'm curious to see what we can produce out around 2030. David Burrows says, this is an important level to hold and rally for copper on the monthly candles. If the long-term structure is going to continue to support a bullish view, this is the spot, in his opinion. That's COPX. What I like to watch is the metal price, copper metal price. But yeah, we're up against that. And we could do a false breakdown and get everyone on the wrong side. That is still possible too. Terry Bro says, gas storage depleting faster than historical mean because of, one, there's no transit of Russian gas. I think that's via Ukraine. And two, magic math of forever drop-in Qatar gas demand doesn't reflect reality. So 2025, here we are, we're pretty low. We are below the mean. And in terms of days of coverage, keep in mind, we don't have the flow rates like we had before. So it's much more difficult to fill this up as quickly as gas from a pipeline. Trump greenlights 25% tariffs on Canada starting early March. Potash stocks are going to go parabolic. U.S. gets 90% of its supply from up north. Monster moves ahead in terms of fertilizers. And here, this actually looks pretty good. Pretty good looking chart. We've got a downtrend line break, if you look. Freight futures AM update. We got Capesize up 6%, Panamax down 2%, and tankers are flat. China's economy, signs of a rebound. So we've got the M2 growth and the tech stock forward earnings per share growth. You can see how correlated this is. I think we're probably going to see an upturn in Chinese stocks. Another thing, which is good, is if China's economy does rebound, they are also a major consumer of commodities. Oil, copper, platinum, anything. They're a major manufacturer of many things, and a consumer of their own manufacturing. Players on the COMEX are no longer rolling over their contracts, but asking for physical delivery of the gold. This is called open interest, and it's up 750%. But why are traders, nation states, and central banks suddenly seeking physical gold delivery? Well, here's my guess. We're at the beginning of a bull market in commodities. I think we're going to see weaker currencies, specifically the dollar. And I think a lot of countries do not trust the bond markets for a lot of their, I'll call it, reinvestment of capital. So they're choosing gold. So it's the distrust between countries. And I also think it's because of a weaker dollar where interest rates will go up, dollar will go down. They may play with controlling, we'll do it QE, quantitative easing, yield curve control. A lot of that stuff could be going on. So I think they don't want any part of it. Also, with the asset deal going on with Russia, I think they're not willing to do that. So with the big long-term downtrend line break in the 40-year decline of U.S. 10-year yields, gold's going to go higher with that. In gold we trust, the optimal gold allocation for performance maximization is 40%. What is your allocation? It says optimal gold allocation. for performance maximization, gold allocation is the x-axis and performance is the y-axis. So they're saying the maximum from 70 to 2024 should be 40%. That's crazy. Mine's more like 25%, 20 to 25% of a variety of precious metals, but 40%, that's pushing it. I kind of like that. I kind of like it. JSG says lots of capitulation talk on the timeline today. Starting to get fun, not touching a single Canadian oil and gas position. I'm ready to lose the entirety of my unrealized gains if necessary. He's up 400% on his gains there, up $148,000 from an original purchase price of $35,000. My account, I've got a lot of stuff that looks like that. My percentages are way higher than 400% versus my entry point, but I'm willing to give up some of my gains to just ride through it. And I'm not permanently giving up my gains. I'm only temporarily giving up gains in the short term. Now, if you guys think that you can time this thing perfectly, go for it. I haven't been able to time it perfectly, and I've made mistakes last bull market where I got caught out of stocks. The third wave's going to be big. I'm not going to miss the third wave. I'm going to ride through whatever volatility we have in the short term. Grady says, commodities TA cycles, gold miners are bottoming very big picture versus gold. It means that gold miners are about to outperform gold long term. And that means the real bull in miners is about to start. Pink breakout will also mean a new high after the blue breakout, i.e. blue breakout confirmation. So we've broken out of the falling wedge here, and then we've gone sideways for a little while. He says ratio charts are about relative strength. They compare the performance of one stock relative to another, and they are a useful additional tool for figuring out sector direction. We have a 5x outperformance. So what does that mean? It means that if we were to get to the top of this back in the early 90s, mid-90s, gold mining companies would outperform gold itself by 5x if it were to go back to that high in a gold bull market. Huge leverage for the mining companies, and we're at a super cheap price. Now, I get a lot of questions, should I buy an ETF or should I do this? I can't answer that for everyone, but for myself, I would hold both. I would own some ETFs, and then I would go out and find some speculative companies and some individual companies that are producers. That's what I would do. Investment wisdom. Human nature has not changed. People will always behave in a manic, depressive way over time. They will offer great values to you. What does that mean? It means people will get afraid and they will sell their stock at the wrong time, panic selling, and you need to take advantage of that if you can. You need to be opposite of everyone else and buy when they are selling, because that's when the best opportunities are there, the best value. And I am taking this 100% to heart here, and I am buying things that are way down, that offer great value, and I'm going to sit and do exactly what Warren Buffett is going to do in the commodity space. Now, so I'm going to get some heat for it. I got heat for buying the bottom of the oil market. I bought the bottom of the oil market, and people were telling me, why are you buying oil? That's stupid. I'm getting the same crap all the time, guys. People tell me all the time, oh, well, this guy, the oil price is going down in the short term. Guys, this isn't new. I've ridden through many 50% pullbacks, and no, they all of them suck, but you just have to sit there like you're on a long plane ride, staring at the seat in front of you saying, well, at least at some point it will come. I mean, at least some point I'll get to the destination. The destination is where I want to be. And if you're playing and trying to trade in and out, hardly anybody makes money that way. I almost guarantee you, if you get really good entry points and you do nothing, you will be outperforming those that are trying to do something. I almost always guarantee it. So what am I doing? Nothing. Take good entry points, get it in the portfolio, do nothing, let it go. Outperform. Bison Interest says, we may be approaching a time of higher world oil demand than world oil supply capacity, which I think is true. This could result in much higher oil prices and a potential return to stagflation-type economic situation last seen in the 1970s, in which oil and gas stocks did quite well. Energy stocks basically beat everything else. I think this is what's coming. This is what I see. Another spot that's going to outperform is going to be gold and silver, mining companies potentially, and the physical metals. That would be another spot, especially for this low. I think those two areas are pretty good. Started a position in TLT, moving on up. That's a short-term position, and I think that's where we ended last time. So I'm going to end it there, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. Special is the coupon code. And Saturday is our question and answer session coming up at 7 a.m. Mountain Time. So I'll see you guys there. Catch you later. This is Finding Value.